Hello everybody, welcome. Myself Sanskaar Rathee and I work with Desvelado Advisory as a consultant analyst. And today we are talking about introduction to annual reports. What are its elements and what should we focus on and what should the small investors look for? Now let's see. These are the various sections that we have covered. Now first let's talk about purpose of annual reports. Now the purpose is to check out the financial performance, stakeholder communication, compliance information, and various elements of the workings of the company. What they have done in the previous quarter or the previous period that the company is reporting for. And now we see for benefits for the small investors, they have a very large benefits. First, we can analyze the trends in various elements. We can see dividend information, performance evaluation for the previous period, and management discussion. And from these, we can find what the company will focus on and what they're trying to do and how they performed in the past. Now we see insights to look for. We can see various insights from management discussion and what the company is preferring in the future for dividend and buybacks, and the auditor report if the elements that are presented they are in line with the measures and regulatory compliances and various trends and elements that we have discussed. And now there are also red flags that we have to look for. If there are non-GAAP measures and incomplete disclosures, it shows that the annual report can be misleading. And also if there are off balance sheet items, earnings management, it is not a good sign. And now we see the overview of business model, how to check out the business models of the companies. So a basic idea of business model can be taken from the company's mission and vision statement, which is available everywhere, and the target customer segment that the company identifies and targets them, and also the type of cost structure that the company has and how does the company reach its targeted audience, and the commentary that they provide in their investor committees. Now we can see the effect of business model on financial stability. The business model affects revenue generation as how big will be the market, so that much will be translated into revenue. And then diversification, market positioning, scalability and efficiency. So these are the basic points of financial stability. And now we move over to financial statements overview. So the three basic statements are income statement, balance sheet and cash flow statements. And now yes, all these three statements are interrelated. As you can see from this flow chart, balance sheet and income statement are related through retained earnings and changes in assets and liabilities. At the changes, because both of these items are presented in balance sheet and income statement. Now in income statement cash flow, they are related to expenses, net income and revenue. If the revenue changes, the net income changes and cash flow changes. The net income is like the top item of cash flow and the bottom line of income statement. Now we see balance sheet and cash flows. So working capital, investment activities and financing activities. These three elements are provided in both balance sheet and cash flow, so both of these become related. Now we see the information to be gathered. The basic information we can gather are the key numbers or the elements that the company generated in the past period, the business strategy that they're following, management opinions and industry analysis. And we also have to look out for some misconceptions that are in the minds of small investors. The basic misconception is that the annual reports are boring and complex and only experts can read it, which is not actually true. And the basic misconception is that the statement focuses only on past performance, but through management discussion and analysis, we can find that management talks about the future plans and strategies. And now the importance of annual reports, as you all know, it provides transparency, accountability, communication, comparison, and investor decision making is processed through that. And now the basics of reading financial statements. So no actual as in no special skills are required. We only need to read read with visual representations, and a bit of data interpretation skills are required. And the common pitfalls in reading financial reports are these basic 5 points. Investors do not consider the industry differences and do not consider changes in accounting policies, and they overlook non-financial factors, and footnotes and disclosures are almost not focused upon. And now the red flags and statements to avoid are these basic 4 points. If the company is aggressive in revenue recognition and changes their accounting policies very frequently, so it is a very big red flag, and that there is some earnings management present in the company. And now the key board members of the companies are CEO, MD, CFO, Chief Operating Officer, Chief Technical Officer. So these four are the big heads of the board of organization. And now corporate governance, which is basically a set of rules and practices by which a company is directed and controlled internally. And now we can see the importance of good corporate finance. It protects the shareholders' rights, enhances transparency, long-term sustainability, and it builds stakeholders' trust and commitment. And now we can see the overview of financial ratios. These are nothing but the quantitative metrics calculated from a company's financial statements to provide insights. And now the importance of financial ratios are these basic 4 points: performance evaluation to find out the valuation of the organization and comparison with peers, and risk assessment. And now these are the limitations: that very complex process is oversimplified through ratios, and there are very large industry differences, and the size and growth differences are also there, and also various accounting policies will produce different accounting ratios. And now the legal and ethical considerations are there if the company is following GAAP principles, audited financial statements are there, and compliance with tax laws are there. So the basic red flags to look for legal and ethical compliance are misleading disclosures, fictitious transactions, inconsistent revenue recognition policies, and abusing party related transactions. And also how the company manages its revenues and how much earnings management is present. It dictates the legal and ethical. And now the measures to prevent financial fraud are basic strong and ethical culture. Internal culture should be there, which is enhanced upon by the board of directors, and whistleblower program should be there, robust internal controls, and there should be an independent audit committee also. And now we see the overview of financial health, how to see the financial health of a company. So these are the basic 6 points. First we review the income statement, then balance sheet, then cash flows, and then we find out various ratios and then interpret these ratios. More information is found in management discussion and auditor's report. And now the key indicators of financial health are ratios, your various margins like gross profit, operating margin, net margin, and various risk measures like beta and volatility of the price of the share. And growth indicators are change in EPS and revenue change. Now history performance analysis can be done through trend analysis, comparison with benchmarks, reviewing previous reports, and reading management discussions and analysis. And now we also have to look for the effect of economic cycles on performance. So these basic 6 points dictate the effect of economic cycles on performance, which are investment cycles, which are 3 to 4 year cycles that goes on in the economy, and then your credit availability, consumer spending, which translates to the total demand, unemployment, which affects demand as well, and then forex rates because the company deals internationally, and then inflation. So thank you, this was it.